Hi there and welcome to another episode of Sidekick TV. This week we're joined by Brobyn from Panda Mortgages, and today we're talking about a little bit about his background coming from banking and now into the broking space, talking about key areas that you can be looking at in terms of business borrowing, and also looking at things like the rates and the terms and what are actually some of the really key numbers that you should be considering when it comes to borrowing for your business. It's not an easy landscape out there at the minute for borrowing, so I'd really love you to watch this video and just find out a little bit more which might help you in your small business. So thank you. Cheers. All right, so today we're joined by Paul from Panda Mortgages, and we're covering off three key areas around working with brokers and business finance. So for small and small businesses and self-employed people. So Paul, we've been talking about it a bit, how lots of people now are not necessarily engaging directly with banks off the first bat, right? So can you give me a bit of an update of where is the landscape now when it comes to business finance?
Yeah, I suppose currently it's hard for people to get business finance. So by talking to an expert like a broker who knows what the banks can offer and what other lenders are out there, it makes their journey a much easier journey for them, because what you don't want to do is go to the bank and tell them something maybe they don't want to know and then sort of ruin your chances. Or it just might be something you might just be simply borrowing money to fund wages, but the particular bank might not like to fund wages, but they'd fund some equipment, but you were going to pay for that in cash. Small little details like that can make a difference overall. So if you talk to a broker beforehand, it means that they can make sure they get the story the way the bank want to see it, basically. And
you've seen both sides of the coin, haven't you? You've been banker.
Yeah.
So give us a bit of a background on what you've done over that decade
or so. So I used to work for one of the main banks, as we call them, the big banks. I worked with their small business team and their business partners. So I'm fortunate that I've seen a big, wide variety of types of clients. So from startups up to businesses trading up to $5 million. So it's a good range. And one of the things I didn't realise when I worked at the bank was you quite often say to people, you can't do that. And look, I've been taught by a bank to know bank rules. And I would say, hey, you can't do that. And I was serious, you couldn't do that because our bank wouldn't do it. But it didn't mean the client couldn't do that. It just meant we couldn't do it. And you don't realise that until you leave, I suppose, or you maybe talk to other people, that there's so many more opportunities out there. So, and every bank has a slightly different appetite. Every bank has a slightly different process. So by being a broker, it gives me the opportunity to very rarely say no, and present a couple of different options. And it might not be with that person's bank, because that might not be the best bank for them at the time. So yeah.
Mm-hmm. And you say, actually, we were just talking briefly off air, that we talk about banks, when we think about, I need to borrow money, I need to buy this or that, or fund something in my business, and it's like, bank, that's all we talk about. But actually, we're not limited to that, are we?
Like we deal with, I think it's over 25 different lenders. Now, you couldn't name probably 10 banks. You know what I mean? So the scope outside of the banks is quite huge, and they're all legitimate lenders. There's nothing dodgy about any of them. They all have different levels of risk. So by that means that some will do deals that are slightly riskier than others, and they all have different niches as well. So there are business specialist lenders. There are home and specialist lenders for people who've been bankrupt, for example, and things like that. So it doesn't mean just because a bank said no that there's not an option out there for someone.
Yeah, and I mean, I work, obviously we work day in, day out with lenders of some description.
Yeah.
And there are some really sophisticated products out there as well with non-bank lenders. Hey, and
yeah, there are.
Just to dive in, I've been working with UDC a bit, certainly not as any kind of broking capacity, but just getting them to work with our clients, and they've got things like revolving credits against big asset bases, so someone that might have diggers or tip trucks or whatever, really massively drives down the costs of funds. It drives down terms. And it's just looking at things differently. But people go, right. Oh, UDC, that's the thing that you just, when you rock up to buy,
just get one car. Yeah, exactly. Yeah, and as you say, there are so many different products out there that different lenders offer that might be more suitable than the lender you've spoken to. So, our job is to know what they all offer and being able to offer something that's suitable for a client at the end of the day. So, by using a broker, I suppose, you get that opportunity to know to have a look over multiple lenders, but without you having to pick up the phone and ring around and do all the work. So
yeah, perfect. And so for you, are you teeing that up then for lots of your clients, so they've got these sophisticated products across banks, non-banks, asset lenders?
Yeah, and sometimes it might be a mix of different products at different lenders, right? So you don't have to have everything at one bank. So you might have your day-to-day transaction at one of the big banks. You might have a revolving credit account at like a Prosper or someone like that, because the bank didn't want to do it. You might have asset finance over at UDC or somewhere else, and sort of split out. So it's, banks do everything, which is great, but it doesn't mean all their products are the best products for you at the end of the day. So when you're looking at that, rather than just going to the bank and the bank giving you the overdraft, the transactional accounts, the car, the high purchase on the car, asset finance, there might be a better option out there. There might not be as well, but I suppose it's just that test of who's being able to give you the best options. So,
perfect. And then I know we hadn't already talked about this, but I'm just curious about it. What are you finding now is the main kind of trigger point for small business owners coming to you? Because they're like, oh, I need to borrow money, or I need to restructure.
So unfortunately, most of the time they've spoken to the bank and the bank has said no. and I get that, because I think we are conditioned to the bank. The bank have the money, right? Yeah. So that's fine. So we're conditioned to go to the bank first because they've got the money, and then they go to the bank, and then the bank say no, and they go, oh, what do I do? And then someone normally goes, oh, you should talk to a broker. and that's sort of the path that it goes down. And at the moment, we're seeing people who are maybe struggling for cash flow. Time it's pretty tough at the moment, so might need a bit of a cash flow injection or just some funds to get through while things are hard. So sometimes they're not even long-term solutions. Sometimes they're short-term solutions just to get through. Yeah, that's what we can offer. So, yeah.
Okay, yeah. So is it it's kind of like there's a bit of a pinch point. That's what people are.
Yes.
The trigger point now. Yeah. And look, we are talking to loads of businesses now like that it's either tight now, or they're looking at their forecasting and they're going, oh, it does get tight. Yeah. And is it a case that the earlier the better?
Oh, definitely. Yes. Yeah. Like the earlier you can organise, because what you. Lenders prefer to lend money to successful businesses, right?
Yeah. so it's a nice way of phrasing it. I say banks lend money to people that don't need it.
Yeah, it's exactly true. So their preference is, if you don't need it, hey, we'll give you money because you're good for it, right? It doesn't really work like that in the world, but that's how they prefer to do things. So if you're in a good position now, but you're going into a not great position, then that's the perfect time, right? Because you want to get ahead of that. You want to go out and you can get some funding now, knowing that, well, in 3 months' time, we're losing this contract, or this is going to happen. We're going to have a bit of a downturn, so we need some cash to help cash flow get through that period. And so, as long as you've got a plan, that's where you come in, is putting that plan together. Go to the bank as early as possible, get it in place, and the better you are, the more likely they are to give you money.
Yeah. I've got it at the minute with a client, and their turnover is going to go up by about 40k a month, right? Mm-hmm. Which looks fantastic, but there's early costs of 15 grand a month to do that.
Yes.
So the cash position is going to get crazy really painful for the first 3 months.
Yeah.
But you don't see that often when you're looking at an awesome contract that you've been working really hard to win.
Yes.
So yeah. So if an opportunity like that comes about, that's a good story to tell the bank, is it? You go to them and you just go, I need money to grow.
Yep, exactly. And unfortunately, the bank don't always. The bank's quite reactive, so they look at past 2 years and things like that, unless you're not doing well, in which case they want to look at the now, which is quite convenient, isn't it?
The worst of either side.
So look, you've done great for the last 2 years, but you're not doing great now. Oh, that's not very good. Or, you haven't done well for the last 2 yeyears, but you're doing great now. But the last 2 years haven't been good. It's unfortunate, but I haven't talked to the bank or talked to another lender. There are lenders out there that will specialise in, okay, we can see that you're injecting this much money and that is going to have this return as well. Yeah. And so it may be the bank, it may not, depending on the bank and depending on how they look at things. But it's a great story to tell, right? Why wouldn't you be willing to spend money if you're going to make more money? It's perfect opportunity, isn't it?
Totally. Yeah. And I suppose that brings us on to what was going to be our key last point, wasn't it? Yeah. Around this isn't the kind of thing that people go out and buy every day, right? And so small business owners don't necessarily know all the core questions to ask or what actually some of the core numbers are. So very often we're borrowing, and what are we used to? We're looking at what's the percentage rate that we're going to pay back. Yeah. Maybe what are the monthly payments? There aren't many things that we actually look at to make a really informed decision. So what do you think, what do you want to encourage your clients or anyone watching this video to actually really consider when it comes to their borrowing?
I think when it comes to the borrowing, it's what you're borrowing for and what the outcome will be. So quite often we get caught up on, we look at housing rates, right? Because they're always in the media. We see them all the time. The bank will advertise a rate and we go, oh, that's a good rate. And then as a business, you go to the bank and they give you a business rate, which isn't a housing rate. And then you go, oh, hang on a minute, that's quite a lot higher than what I was expecting it to be, because I've seen rates advertised much lower. And then you go from a bank to maybe a non-bank or someone else, and the rate gets even higher. And they can be extremely high. So I suppose the key thing is working out, right, I need to borrow this money. What is it for? What is my return on my investment? So if I'm buying a piece of equipment that will make me an extra $100,000 a year, is paying $30,000, which is a lot of money for a small business, worth it? Well, it is for the long term. It might feel really painful in the short term. So when someone says the interest rate might be 20%, we go, yeah. But if that 20% cost is actually giving you a bigger return, then it's worthwhile, right? And I guess the other key thing is that the interest cost is tax deductible at the end of the day, which you guys advise your clients on that. So as long as it doesn't affect your cash flow, what does it matter? It matters, but it doesn't, because it's tax deductible at the end of the day. So that money, you're going to claim it back. So if the interest rate is 10% or 20%, if cash flow can handle that, the rate itself shouldn't have a big bearing on, it's easy to say, but on the outcome. But
it makes perfect sense. It's actually looking at the bigger picture.
Exactly.
The worst, most expensive, most painful debt I come across is actually where the borrowing isn't tied to a great strategy. It's, I just needed this money to survive. So they got a loan. I nearly named a company there. So they got a loan. And you just look at it and you go, that was just to survive. Well, actually, have you just made the hole bigger?
That is another thing, and it's you've got to know when not to borrow money as well, right? And as much as my job is to get people money, there are the occasions where I sit down with someone and go, if I get you this money, I think it's going to make your position worse. Make that hole bigger, because you can't just keep digging a hole and hoping to get out of it. You've got to have a strategy around it, and that's where talking to your advisor, talking to your accountant, talking to a broker is key. I think in those people around you that can give you good advice, because no one wants to go, oh, my business might fall over if I don't go and get this money, but your business still might fall over if you do go get the money. And do you want to have a bigger hole if it does? It's an awful conversation. I'm sure you have it, hopefully not too often, but it happens, right? But it's knowing what the purpose of the funds is for, I think is key there.
When we see it, we usually see the aftermath. We have it where people are perhaps wanting to join us because they've decided now they need help. Right. And we look at it and we go, oh, that's a big hole to try and work out of. And often we see it's the difference then with going, this will probably cost you your house. Whereas previously, before some of that bad debt, you would have had a bad day,
yes,
but you would have probably kept the house.
Yes.
So but we cannot advise on this stuff. And again, it comes down to us going, please speak to good brokers, good advisors that can rubber stamp that advice.
Yeah.
Because we can't.
No.
Because it's financial advice.
Yes, exactly. And I've also seen clients where they've gone so far down a hole that the house is going to be lost, and it could have been averted, right? And no one wants to say, well, now's the time to cut your losses. But I think if you have that harsh conversation, you say, well, if you cut your losses now, you walk away with your house, and if you don't, then there's a risk you could lose your house. Then I think it's important to know that and to know what it is you're getting into at the end of the day. So, and that's an important part of what we do as financial advisors. We've got to make sure that we are giving advice that's suitable for a client. So I can't just go and get money for the sake of getting money. It's got to be for a good reason. And I have to believe also that it's going to help the client. And there've been clients that I've turned away, because I've said, oh, look, I don't think you should be borrowing this money, and sorry, I can't help you. And look, those people may have gone and got money on their own somewhere else. They may not have, hopefully, and may have looked at something different. But you have to do that every now and again. So, yeah.
Totally. Excellent. And so, in kind of parting, what advice would you give to small business owners, self-employed people that are, they're looking at these opportunities they might have or needs for money or borrowing at the minute?
Yep.
What would be some kind of parting words you might have for them?
I guess the key thing is to talk to a specialist, talk to a broker, talk to the people around you to get some advice on where you should go to start with. Ideally, if you talk to a broker first rather than talk to your bank, the broker can maybe do a bit of a test and sort of help you present something to the bank that is suitable for the bank. So it's just a good starting point. If you go to the bank first and maybe tell them something that you weren't sure if you're going to do, and it might not sit with them, it's hard to go back and go, actually, I don't want to do that now. so by having a chat and going, I was thinking about doing this, and I might say, I might have a husband and wife who are looking to buy a business, and they might say, we're both going to quit our jobs to go work in the business. And I might go, well, actually, could one of you maybe stay in your job and for a little while and one run the business, because that way you're spreading your risk. And the bank will prefer that as well. So that makes a big difference overall. So having that chat, I think, is key, and not getting, having that chat, and then I suppose making sure the purpose of funds is suitable and not getting caught up on a number at the end of the day, as long as that helps you get to where you want to go.
Yeah, so making it really well thought out, hey?
Yes, yeah, that's right. Yeah.
Perfect, awesome. Hey, well, look, thanks so much, Paul. That's great. We'll link to Paul's details in the comments section in here. And if you've enjoyed this video, which I hope you have, please do like and subscribe, and thank you very much. Cheers. Welcome to Sidekick TV. I'm your host, Rick Thorpe. Sidekick TV is the place for Kiwi business owners and entrepreneurs to learn all about finance, accounting, and how to run and operate a business in New Zealand. We're going to interview experts from the finance realm and fellow Kiwi business owners. Stay tuned.